Hello value investors, thank you for joining me. Today I want to talk about Fortinet and why Fortinet is an attractive investment in the cybersecurity space. If you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. You're welcome to do a totally free trial and cancel anytime before 14 days and don't get charged anything. So come and see if you find stocks that suit you. So let's get started. Fortinet is an interesting investment because there's this whole tailwind right now in cybersecurity stocks. You probably know some of the crowd favorites like CrowdFaker. There's this very rapidly expanding market. Fortinet specifically targets network security. It does have some exposure to some other sites like device security, cloud security, but it's primarily a firewall. Okay, so its business is split. So about 35% of its business is products that carry, and the other 65% is service space. So within the service space, probably not coincidentally, 65% of that revenue is recurring. So of the approximately 2.6 billion that it made last year, 65% of that is recurring. So this is something that I think is worthwhile depicting. So throughout last year, Fortinet was growing at approximately 18 to 22% year over year. So let's say take that midpoint of about 20%. However, the billings last quarter, Q1 21, for their fiscal year, came in at 27%. So the billings are pushing forward the revenue, and although revenue came in quite cool at 23%, I think that's going to be even some more acceleration over the next quarter or so. So there's a very strong dynamic happening here that I think is worthwhile considering. As noted already, you have this whole space working out quite well, and it's quite shocking that one of the crowd favorites like CrowdStrike actually has only done 30% over the last 6 months, whereas FireEye and Fortinet have done really well. So you can just see overall there's a very strong demand right here for this sector. Now, as you know, if you've seen my video before, I typically pay a lot of attention to the company's profitability, and Fortinet has very strong profit. You probably can't really see on the video, but it has about 25% thereabouts operating profit margins. That's really attractive because you have more than 20% growth rates and more than 20% operating margin. So on the rule of 40, it's balancing that really well, the growth and the profitability. I touched on the article here as well that it has 35% free cash flow margins. There are not many SaaS companies, not really a SaaS company per se, but there are not many cybersecurity companies that are putting out such high free cash flow margins. This is really something that's quite attractive. Now, finally, the company is valued at 12 times forward sales. That is not exuberant in this space. For a company in this space growing at approximately 20%, I would expect it to be slightly higher. I give the example before of CrowdStrike. So CrowdStrike is priced at 38 times forward sales. On the other hand, FireEye is a slightly slower growing company and is priced at approximately about 5 times forward sales. Having said that, FireEye is spinning off half their business for some cash, so I think that that's probably quite interesting as well, because with the half that's remaining is going to be growing at approximately 20%. However, even if you take that on board, the company is priced at approximately 10 times forward sales. So at the bottom end, you got FireEye, and then you got slightly above that, you got Fortinet, and much higher, you got CrowdStrike. So the expectations for CrowdStrike are very high, the expectations for Fortinet are not very high. So I think that's quite attractive when you can remember how much free cash flow margin at 35% it has. So with all that, I hope you found this video useful. Don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. See you soon.